The number one reason traders fail? Risk management. Today, I'm going to teach you how to manage risk like a pro. If you've ever entered a trade and you didn't know exactly how much money you were going to lose if you were wrong, then you're not managing risk. This is a skill that is required of anyone that wants to become a trader, that is aspiring to be a trader, and it's second nature to anyone that is a trader. Every single trade requires this. Every single trade idea, you know this information. You're never going to be surprised. So today I'm going to walk you through how to do this like a pro. First off here, we're going to go ahead and run over to the SPY. We're going to use yesterday as an example, as it was the most recent example. And if you guys are paying attention to the market, you're going to be familiar with what I'm showing you. All right, so first of all, let me go ahead and jump back. This is what the S&P 500 looked like yesterday. We already know the results, so I'm just going to go ahead and play it so we can kind of see how this came about. This here is a classic VWAP bounce trade, right? This dotted white line is the VWAP. And I'm going to show you how to enter this trade, plan this trade, and manage the risk properly so that you know exactly how much you're going to lose. And more importantly, you can manage your psychological expectations so that you're not getting hesitation. You're not getting fear of the entry, right? You're not afraid of what's going to happen. That is a huge part of this. I'm going to get into this in another video. You may already know, but trading is probably 10 to 20% technical and 80% psychological. So let's go ahead and play this and see how this turns out. Now we already know what's going to happen, right? This is a 5-minute chart on the SPY. Volume looks good. That pullback that just happened looks good. We're coming back down to the VWAP now. We should be seeing some human interaction, some buying happening here if we're going to hold. So what do you guys see right here? Right, please post in the comments. Let me know what you see right here. That'll better help me to understand where you guys are at and what my next video should be about. But right here, what I see is consolidation. I see my favorite geometric pattern, which is a triangle. I see that it's above VWAP, and I see that this is a pullback to VWAP after a push higher, which is the definition of a VWAP bounce. Let me go ahead and try to highlight this for you. Right, so here's the triangle. This is my bread and butter. This is what I trade. I trade triangles, okay? So this is how I see the market. This is how I see price action. I do see this wick went a little higher. We can adjust it if you want. I see that the volume here is pushing. We have a higher volume bar than the last, 8, 9 bars. Again, this is a 5-minute chart. So right at this point, okay, we saw that support was bought. Boom. Right? We've got the kind of hammer candle that people like to call it. Right? We then have a bullish engulfing candle. Boom. It engulfs the entire previous one on volume in the triangle at VWAP. So these are all positive things. Now, how are you going to enter this trade? What is your size going to be? Like I said earlier, if you don't know exactly how much you're going to lose, then you're doing this wrong. You're never going to make it if you can't satisfy your brain's need to remove uncertainty. Okay, so we need to give it certainty. How do we do this? Well, right off the bat, if you were to enter here, or even let's just make it easy and say you wanted to enter right here at this high, right? First of all, this is called buying resistance. I'm not a huge fan of this. Most of the time I would like to buy the support, which was down here. But let's just say, we see it. This is our point. This is where we're going to feel comfortable getting in, and that's going to be 426.31. So you're going to take your measure tool, and you're going to measure from the entry to the stop. All right. Since we've got 1, 2, 3 lows here, and they all held, right? Lows held, lows held, fake out, boom, right? Push. This is a $1 move, okay? This is a $1 stop. As you see, if you bought here, the price would have to drop $1 to hit your stop. Now, these stops are going to be marketable limit orders. All right, so you're going to put the order out there as a limit order, but it's also going to be marketable. This removes that, okay, so all the traders that are in here right now, they all have their stop below this low. And sometimes if yours is just a little lower than the rest of them, when the price snaps through that, it's possible for the price to actually skip over your order with the limit order, like a hard limit order. And you don't want that to happen. That's going to cause deer in the headlights situation. That's going to cause what the heck's going on as the price is going down. You don't want to be fumbling around with what's happening when you've lost money, right? It's going to cause fear. It's going to cause uncertainty. You don't want any of those things. So first of all, here we are, right? We've got our $1 range to the stop. Now, previous to this, you should have decided how much money you're willing to risk per trade, okay? Now, sometimes what I do is I go off of the 1% rule. So I risk 1% of my entire account balance per trade. Let's say your account is, I don't know, $10,000. Well, then that means you're going to risk $100 on every single trade. Now, we know that the stop is $1 away from the entry. Okay, so how many shares can you take? Right? I know this is easy math, but I'm just going to say this to get this into your mind, right? So how many times can we lose $1 to equal $100? $100 divided by 1 equals, we can lose $1 100 times. So that's how many shares we can take, right? 100 shares. So we take our 100 shares, we put our stop down here at 425.32. That is exactly $1 away. And if we're wrong, we're going to lose exactly $100. We're not going to lose a random amount. We're not going to find out after the trade. This is known previous to entering the trade. Okay? So now let's see what happens. Right, here we are. We pushed up. Bam. That was the buy point. Right, looking good. Now we're going through the highs of the recent test here. We've gone through the second high here. And now we just blasted right through the high of day. And look at the volume, man. Look at the volume. This is exactly what you want to see. You want to see a volume ramp. You want to see, as the price goes higher and higher, that there is more and more people buying. Okay, now these are the people that are waiting for, this high to break, right? These are also, like on this candle here, let me show you why. On this situation right here, right, you're going to come down and you're going to see that there's a very high volume bar on this. Why is that? Well, there's traders out there that like to short this stuff, right? They short high of day. That's a common entry, right? Now, are you going to do that on the market when the market's ripped 20% in the last 2 weeks? No, right? You're going to need a much bigger consolidation pattern and a breakdown to do that. But on this situation here, there was some people that tried to go short here, right? Not only did they try to go short, but there's also people that are waiting to buy as it goes above this line. Now, in a second here, I'm going to show you why you don't want to do that. Okay, you don't want to buy resistance. First of all, look at how far away the stop would have to be, right? That's $2. So if you waited to buy the high of day breakout, your stop has to be twice as large as if you just waited for the first consolidation break, or even if you bought off of support, your stop could have been like 30, 40 cents. Okay, but just for ease here, and new traders like to buy when a new high breaks. Takes a little bit more trust in your system to buy on support. I know that, so we're going to talk about the break of high here. All right, so as we break through the high, this candle here looking like we have a little bit less volume coming through, but it nowhere near says that it's over. So let's go ahead and continue. That looked good too. Right, we started dripping down. And then it got caught. Boom, it got bought right off that. Another bullish engulfing candle showing strength. Through the highs again. We did get sold into a little bit right there. Now, at this point right here, let me show you the situation. Our entry was here. Let's say our target was there and our stop was here, right? So this is a 1-to-1 trade. Now, we'll get into risk multiples, like trading risk multiples later. But I just want you to see that already this here is a 2-to-1 trade. All right. So from the buy to our stop, right? That's, let's say, one risk, which is $100. And then as the price goes up, breaks through the high of day, we've now reached our 2-to-1. Okay, right here would have been our 2-to-1. So look at what happened. Look at this candle right there, right? What do you think happened there? Why do you think that there was selling there? Well, I'm going to tell you. And that's all the people that are doing this exact trade that I'm showing you. They're selling out of their position, okay? They had their profit sells to get out of the position from along at that point. That's what caused that candle to go down, right? But it's not over yet. We still have buyers. This is going to be your FOMO buyers. This is going to be people that are feeling like they're going to miss the trade. They were too slow. They hesitated down there, and now they're finally convinced that they should get in at the top, right? You know, this has probably happened to you. It used to happen to me too. Look at this, right? This is a perfect VWAP bounce trade. Now, I did give you guys a pretty weak entry here. Like, this was a decent entry. Yes, you got your 2-to-1. I see that. But we are on a 5-minute chart, right? I don't take entries on the 5-minute chart. My entries are going to come from the 24-second chart. I know that sounds weird, but I've done a lot of back testing on this. My mentor, the guy that taught me, has done a ton of back testing on this. And it's just the way that I can read the market, right? So let me lock the chart here. I'm going to switch over to the 24, and I'm going to show you why this is so important. So check this out. If you were waiting for either a touch of support, right, which would have been right here, or a break of this consolidation triangle, which is typically what you want to wait for, the pullback happened, okay, and then the push. Now check this out. You can now adjust your stop. Okay, so let's say that our entry was going to be right here, right? As it went through this high here, boom, we bought that. Now where's our stop going to go? Under the most recent low. Now that is the most recent low right there. Okay, this here. Now on a faster time frame chart, you can see the inside action. Right, we're going to call this the inside action. This is what's happening inside the 5-minute candles, 10-minute candles, 1-minute candles. You know, you get to see the inside. Now, if you bought it on this little breakout, right, boom, the pullback starts to go, and you're like, you know what, I like it. We're going through this previous high here. I don't see much resistance happening. I'm going to go ahead and purchase this and put my stop below the most recent low. Now check this out. We're going to do it again. Right? We buy through the high. Our stop is going to be here. That's a 34-cent stop. That's much better than a $1 stop. The reason that's better is because you can now take more shares on the position and still be risking $100, right? So let's see how many shares we could do, right? So we want to lose $100. Now, how many times can we lose that on 30? How many times can we lose 34 cents to lose $100? So let's see. Boom, 294. So we can actually take 300 shares of this now. 300, not just 100, 300 with an even tighter stop. Okay, so as we're pushing through here, now your risk reward, remember a minute ago it was just 2-to-1 to get to this point up here? Well, now, because your risk is so much tighter, right? Because you're reading the inside candles here, you actually could have pulled off a 5.5-to-1 trade just by getting to this point here. Now, let's say, you know, somehow you knew the market was just going to continue. I would have been out by here. I would not have expected this to keep running, especially on this pullback here. I most likely would have gotten out because of this break right here. As we broke this and came up for the retest and couldn't get through, I would have sold the whole position. But let's just say you didn't. Let's just say you made it all the way to, the high of day almost. Look at this. This is an 8.2 to 1 trade. You would have made 8 times what you risked in this trade if you were able to hold on till the end of day. That is amazing. That's amazing. Let's see here. You risked 35 cents, right, to gain, let me use the tool so I'm not wrong, to gain $2.87. Now, let's say you took your 300 shares, right, and you made $2 and let's just call it 80 cents. You would have made $840 on a $100 risk trade, right? This is called risk management. All right, I hope you guys got a little bit of value out of this. I'm going to get more in depth in this. I wasn't okay getting into technical analysis, entries, exits, and all that without first sharing with you guys how to control your downside, all right? How to control your risk, how to, not lose everything, how to not, you don't go 100% all in, right? Like I said, even if you could have bought 5,000 shares, right? Because your risk tolerance is only $100 on a $10,000 account, which is 1% each trade, it doesn't matter how many you can buy, right? All that matters is that you have enough capital to purchase the 1% of the risk, right? You need to buy enough shares to risk 1%. That's all that matters. What this also is going to do, and I'm going to get into this in the future as well, this is going to make every trade the same, right? This is, again, another thing that you're just, feeding your brain, feeding it certainty so it knows what's happening and it's not afraid of the situation, so that every trade is the exact same, right? Even if the trade goes crazy, it doesn't matter, because if it went against you and you lost, you lose the same amount every time. There's different trade management techniques on how to stay in this trend until a break. There's different exit strategies. There's different price targets that come from, technical spots like high of day, come from maybe risk multiples like 2R, 3R, 4R. Like, the 35 cents that we had here, this stop, this here would be 1R. This is what you're risking. This is one risk, right? So we bought here and our one risk would be to here, but then it went 8 times past that. So you made 8 to 1. Now let me blow your mind here for a minute. If every trade you took was an 8 to 1 risk reward, you would only need to be right about 12% of the time. Your accuracy would only have to be 12% to break even. That's pretty awesome, right? So accuracy doesn't really matter. It doesn't matter. Like you could lose 3 out of 4 trades, but if every trade you take is a 3 to 1 risk reward, you'll break even as long as you're right 25% of the time, right? You don't have to be right all the time. That's another thing that could feed the whole, certainty, uncertainty, fear, of your brain. And I'm going to get into this whole psychology part in the next video here. I hope you guys have learned something. I hope you kind of understand now how to risk the right amount per trade. And just, one more time so you guys, are understanding this. Before you enter the trade, you need to measure out how far away your entry is to where you're going to exit for a loss. When you're going to say, okay, I'm wrong, I need to get out, you need to measure that distance. This is going to become really fast. If it takes you a little bit of time right now, that's okay. You'll get better at it. You just need the muscle memory to do it, and you need to do it every single time, okay? If you don't do it on a couple trades, you need to discipline yourself. You need to drill down on that and make sure this is second nature to you. So I hope you guys, I hope you found value in this. If you did, subscribe, like, comment, let me know what you think. I hope this was clear. I'm going to do a couple more videos on risk management. The channel is called Risk Management, right? Tactical Risk Management. And this is very tactical, right? The 24-second chart, the inside action, basing your low or your stop off of a previous low, right? This is a very tactical approach. And this is how you do it. This is how a professional trader does it. So let me just leave you with a bit of knowledge here. Most people don't last long enough to finally make it in the market. Okay? Most people cannot do what we just talked about. They can't. Greed takes over, fear takes over, their psychology pushes them in directions that they don't want to go, and they don't last long enough to become profitable. So what we're doing here is we are ensuring, okay, with only risking 1% per trade, we are ensuring that we will last long enough in this business to become profitable. If you found this video helpful, if you found value in this, please thumbs up, subscribe, stick around. I got more coming. I just want to definitely get the baseline of how to control your risk and your downside before I start putting out information on entries, exits, profit targets, etc. I got to make sure you guys are prepared. I can't just throw you into the lion's den and hope you make it. Let me know if there's something you would like me to hit on a little more, and I will definitely do that. Have a good one.